now for Closing Bell exclusive is Hasbro CEO Chris Cox. Chris, welcome. No, it's your first TV interview. It's good to have you.
Oh, thanks for having me, Sarah.
So let's start with Wizards of the Coast, the Magic game, Dungeons and Dragons. What is driving the growth in this unit, which is we should say where you come from?
Well, yeah, Wizards has grown for 12 out of the last 13 years, and over the last 6 years, we've more than doubled the business. I think it's just fundamentally strong brands, a highly engaged consumer base, and a great set of channel partners and some really good product innovation.
Is there a Stranger Things boost happening there?
Oh, well, yeah. I mean, I think generally speaking, D&D, Magic, they've really started to inhabit the zeitgeist of popular culture. Stranger Things, The Big Bang Theory, multiple movies and TV shows. Nerd culture is culture now.
Nerd culture is culture. Did not realize that. But also, it seems to be a certain nostalgia of the old school games in your portfolio coming back. Is that a growth driver?
Yeah, we call it multi-generational play and entertainment. It really is this insight that play is not just for kids, it's ageless. And people who really got into games and toys back in the 80s, 90s, when I was a little kid, or really I started playing, they're coming back. Just like kind of classic cars. You want to go back and play the games that were big when you were a kid. And what's great about it is you want to share it with your kids. So we're seeing this multimodal distribution of our fans, where you've got like this big boost in Gen X and boomers, and now you're seeing it in Gen Z and millennials.
I remember playing Magic cards when I was in high school, maybe a little bit earlier. So Chris, the one part of the portfolio that didn't work this quarter was entertainment, a decline there. What's happening?
Well, I think you have to kind of piece apart entertainment a little bit. We sold our music business in Q3 of last year. When you take out the music business, our overall entertainment segment was up 9% year over year through the first half. Our TV and our entertainment segment was down in Q2, but really that's just a function of when we do deliveries of different movies and TV shows. For the full year, we're still projecting mid-single digit growth on the top line and improving margins.
Inventory was also was an interesting number, up 75% from a year ago. So what is happening there? Because we have some reporting, we do some deep dives into the supply chain and the ports, and some of the ports that you import your products from are really backed up and really clogged. So are you stockpiling ahead of the holidays? What's the story here?
Well, I think for the last 2 years since the pandemic began, particularly in the back half of the year, we've had a lot of out-of-stock issues, which has hurt like our overall top line and bottom line performance. And so this year we moved up our builds of key products, particularly a lot of our big chase items for the holiday, by about 2 to 3 months. And so you're seeing that reflected in our inventory and in our retailers' inventory. Now, this inventory is of great quality. It's sought-after product, and we're already seeing green shoots on point of sales early in Q3. For instance, we just got through Prime Days with Amazon, which last year was in June, this year was in July, and we saw an uptick of 20%. And we think that's reflective of really strong product and our ability to chase it and aggressively promote with our retailers because we have it on hand.
But what is actually happening with the ports problem and the supply chain issues? Is it getting better or worse?
We're seeing it getting better. Our days on boat has declined by about half versus where it was at the peak of the pandemic, but it's still elevated versus pre-pandemic. Our supply chain team has been working with freight forwarders and the holistic supply chain, and we feel good about our position to be able to work with our retailers and make sure that we're able to supply them for hot product this holiday.
What about prices? I know you've raised prices on the Nerf blasters, the My Little Pony. How's the consumer responding, and do you think that you have more room to keep doing that?
Yeah, we entered the year with a relatively measured outlook for where we saw the overall economy and where the category is going, and we're maintaining that guidance. On a constant currency basis, we see Hasbro growing in the low single digits and our operating profit margins growing from 15.5% last year to 16% this year. Certainly we're seeing a little bit of an impact on inflation with the consumer, but I think you have to take that in stride and recognize that toys and games and entertainment tend to be very economically resilient categories, and we're certainly seeing that in our results and what we're calling for our guidance.